Before we start, quick disclaimer. This report is for educational purposes only and is not financial advice. It does not consider your objectives, financial situation, or risk tolerance. Now, let's get into the highlights. Welcome to ZedXe's Earnings Spotlight, powered by ZedXe. In this episode, we dive into Apple's fiscal first quarter 2026 results. The quarter covers the 3 months ending December 27, 2025, and delivered yet another record for the world's most valuable company. Sit back as we unpack the numbers and explore what they mean for investors and Apple fans alike. Apple shattered expectations with revenue of $143.8 billion, up 16% from a year ago. Diluted earnings per share came in at $2.84, rising 19%. CEO Tim Cook described the period as a record-breaking quarter, driven by unprecedented demand for the latest iPhone and by record services revenue. On the product front, the iPhone segment delivered $85.3 billion in revenue, up about 23%. Apple's new iPhone 17 lineup has resonated with consumers, especially in China, where pent-up demand and new financing options boosted sales. The services division, encompassing the App Store, Apple Music, iCloud, and Apple Pay, booked $30 billion, an all-time high. This business enjoys very high margins and underpins Apple's shift toward a recurring revenue model. Delving deeper into the numbers, Apple's gross margin was $69.2 billion, implying almost 48% gross margin. The company spent $10.9 billion on research and development and $7.5 billion on selling, general and administrative expenses. After operating expenses, Apple generated operating income of $50.9 billion. Net income was $42.1 billion, up from $36.3 billion last year. These numbers translate into strong cash flows. Apple reported nearly $54 billion in operating cash flow and returned $32 billion to shareholders through dividends and buybacks. Regionally, the Americas generated $58.5 billion, Europe $38.1 billion, and Greater China an impressive $25.5 billion. In fact, Greater China saw the biggest growth thanks to robust iPhone demand and expanded distribution. Japan and the rest of Asia-Pacific posted more modest gains. What's driving this performance? First, Apple continues to perfect its product cycle. The iPhone remains the central hub, and services act as high-margin annuity streams that grow with the installed base. With more than 2.5 billion active devices in circulation, the company has unprecedented reach. Second, Apple's supply chain and pricing power allowed it to maintain strong margins despite inflation and currency headwinds. Third, the ecosystem effect is real. Apple Vision Pro, the Mac and iPad lineup, wearables and accessories keep customers within the Apple family. Management also highlighted investments in emerging technologies, including artificial intelligence and spatial computing. The Vision Pro headset launched in early 2026 and is expected to open new categories of consumer and enterprise applications. Apple's focus on privacy, sustainability, and customer experience continues to differentiate it from competitors. Looking ahead, Apple did not provide formal revenue guidance. However, the company signaled confidence in its ability to drive growth through innovation and its expanding services platform. Investors should monitor macroeconomic conditions, foreign exchange, and regulatory risks, which Apple explicitly notes in its forward-looking statements. The strong balance sheet, with nearly $379 billion in assets, positions Apple to invest heavily in new technologies while continuing to return capital to shareholders. In summary, Apple's fiscal Q1 2026 delivered record revenue and profits driven by booming iPhone sales and relentless growth in its services business. The company's ability to generate cash, maintain industry-leading margins, and invest in the future remains unmatched. Thank you for listening. Powered by ZedXe.